Happy New Year, everyone. Nick here doing the strategy video for the first week of 2023. So let's continue the theme of finding footing. So the goal this time, we rallied, just to recap. I know it's been a few days. We rallied almost 18% on the S&P, top left-hand corner, from here to here, and then we're giving back some. The goal for the last 2 weeks has been the one word I've been harping on, to find stabilization. And the last 2 weeks did deliver that. We did have violent moves within the week, but we ended up having some sort of a sideways move for 2 weeks. The ones that were hit hardest were the mega caps, like Apple, for example. So hopefully now they've done selling them for tax purposes, and let's see what happens here. So this week, the best thing to do would be to finish stabilizing. The goal is not to make it like every other give back from all the other rallies. For example, in June we bounced, and in March we bounced, and when we gave back too much and made a new low. Same. And this is the one that I want it to be different. That's why I'm insisting on, let's show some signs of going sideways, which we haven't done before. So let's hope about that. Let's hope for that. So last week, you can see the greenish even on the Qs. The Dow is probably the best shape, which is pretty bizarre, right here, and relative to the last 3 weeks. And the small caps are perfectly flat 2 weeks in a row. So this week, I'm looking for another quiet to greenish week. Even a little bit red would be fine. I just don't want giant moves. And I'll show you what's going on as the market opened here on Monday night. So what numbers am I looking for? For example, on the SPX, if I go here and I go to SPX, I want to beat the prior two fails, which were recent. So November here and December, and maybe even back to September. So we rallied and we failed 3 times, arguably 4, in the same zone, 4110, 4120 on the SPX, see that? So if you want to write numbers, 4110 to 4120. Going above 4120 is, I bet the bears will be in trouble, because we could probably target here. What? Yes, we could. Not in a straight shot. We have prior fails to deal with, but it's definitely doable. So 4110 is the first number in my head. And on the downside, of course, you don't want to go below that little spat we had at 3760 not too long ago. And this is daily now, so about a week ago. And also the base from November 5th, before that wild and crazy rally that we had on 10th. And, of course, not to lose this one, the 3490, 3500 if you want to round numbers. So again, the battle is still between 4110 and the low that we put in October, which was a pretty violent low. That's the SPX. On the SPY, you would be looking at 411, 412. So if I go back to the SPY here, same time frame, 411, 412. And the low last week was about 375, and these are bounces that are around 367, 368. So I just gave you a whole bunch of numbers that if you are technically inclined, you can use those numbers. So if we break through this, the bears are somewhat in trouble, because the target will become up here, but within a couple of different dips. So we get here, we drop, we get up a little higher, we drop, and then we establish an ascending trend channel. We have had a descending channel for over a year. What we've gone sideways. What we want is to build an ascending channel. You kind of see the picture now. That's why I said stabilization. Let's go sideways a little bit so we can start building up. In a way, there are potentially emotional headlines that could move the markets one way or another. But I don't anticipate them to be game changers, because the data should be just as garbage as usually. The first one is that CNBC will probably focus on, which is the Fed minutes. So this is a conundrum to me, because the minutes happened like 3 weeks ago, the meetings, and we know the outcomes. They told us, and they've had like 15 or 20 different speeches about it. So what's the mystery? I don't understand it yet. Everybody just, oh my God, the Fed minutes are getting released. Okay. Now, on Friday, I believe we do have a jobs number, and maybe on Thursday we have the ADP preview of the jobs number, the private sector that doesn't include government. So I believe that if we get too strong of a number in the jobs, we might have a spat. Now, I want to caution you that this one is a little bit different. I've been reading headline after headline about major companies like Goldman Sachs and JP Morgan, I don't remember who, but something along those caliber, starting to poke at the BLS jobs numbers. Now, if you've been with me for a while, I've called them crap for a long time, right? Yeah, hello. Now everybody's getting on the bandwagon of the government numbers are crap. Of course they're crap. They're phone calls. They make phone calls and they write them down and they probably fax them. So yeah, they're crap. You can't build bridges based on data like that. But what does that mean? Maybe this time the reaction is even a little bit more emotional, or maybe a little bit less. Anyway, I don't know how to interpret it. All I know is they brought it up to the forefront. JP Morgan, Goldman Sachs, whoever it was, I think it was a couple of them. Maybe those are the two I'm talking about. Maybe even bigger than this. And they're focusing on, hey, your numbers are BS, and they can't be right when the GDP is this or that. That's the argument. Okay, so just keep wiggle room. If you have some credit spreads that expire this week, maybe you don't want them this week. Maybe you want to close them early before the jobs number. I don't know what's going to happen. All I know is I will try to trade off of it to see if I can make money off of the emotional reactions rather than try to guess which way it's going to go. So let's recap. Fresh year. Oh, I forgot. Let me show you what happened at the open. So the futures opened and we soared to 3,900, and then we gave it all back. We're back to flat on the futures, which isn't bad news because I look at it. I have resistance, 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 resistance. You see those words? I didn't put them now. Those were there last week. And let me zoom back out, and you'll see why we're failing at 3,900 because it's pretty allergic so far. You can see how many resistance lines there are. Why? Because that's what happens. When you have support and the support fails, every line you failed at before will become a problem to overtake. As long as you maintain a higher low trend, you don't give back too much. That's normal. So if we fade here and we spend a day or two to come back to here, that's normal. But it's not okay to come back to all the way down to here and rebuild everything. All right, so I'll update you on the levels in the morning note. But again, the overall theme still is stabilization, but with a little bit of progress towards the highs that just failed November, December. So 4110 on the SPX, 4120 versus the recent lows that we held last week and the week before that and a couple of weeks before that.